Good morning and welcome to Signal Centre's Talking Bull. It is the 18th of May. I'm Steve O'Hare and I'm going to run through the headlines, look at some analysis. Feel free to jump in the chats and request whatever you want me to take a look at from a technical analysis point of view. And maybe we can give you a little bit of support in that fantastic world of trading. So I'm going to dive in to the headlines, make myself a little bit smaller and then go through them with you. US housing starts increased slightly to an annual rate of 1.4 million for April from 1.37 the previous month, and in line with consensus forecast, while building permits edge lower to an annual rate of 1.42 from a revised 1.44. House Speaker McCarthy stated that he would spend all his effort to resolve the debt ceiling issue and that there is opportunity to find common ground, but only a few days to get the job done. Seems to be we're going around in circles here. We seem to always have this issue when it comes around to the debt ceiling. President Biden stated that he's confident that an agreement on the debt ceiling will be reached. The dollar gained fresh support with net demand amid reservations surrounding the outlook for Chinese and Eurozone economies. The US currency was resilient despite some hopes that there would be an agreement on the debt ceiling. Bank of England Governor Bailey stated that the economic outlook is much brighter than it was a few months ago, with the bank now forecasting modest growth rather than a shallow and long recession. Bailey noted that inflation has been higher than expected, but will decline sharply over the next few months. He reiterated that inflation risks are skewed to the upside and the bank's commitment to the 2% target is unwavering. Very, very unrealistic target. Really should sort of like get into this century. He added that there was evidence of the labour market softening, but at a slower pace than expected in February. The Australian labour market data was expected weaker, or came out weaker than expected, with a 4,300 decline in employment compared with expectations of an increase of 25,000. Unemployment rate also increased to 3.7% from 3.5 and above expectations. The latest US jobless claims will be released on Thursday with the expectations of a decline to around 255,000 on the week. Philly Fed index will also be potentially important after the very weak New York survey earlier in the week. So that's it from the headlines. Let's get into some analysis. We're going to start off with, not as normal, we could start off with cryptocurrencies, take a quick look at those, and then dive into commodities, FX, and indices. So let's take a look. Bitcoin had a little bit of a rally from the support from about 3 o'clock yesterday afternoon, actually, UK time. We've still got a little bit of a conflict going on. We've got this slightly longer term inverse head and shoulders formation on the weekly chart. We've retested the neckline and we are trading positive this week. So that's a pretty good sign. The measured move target of that formation is 35,000. So still a little bit of potential on the weekly chart, despite the pullback over the last couple of weeks. On the daily chart, however, we're seeing an equal and opposite formation. This is, we've got the neckline here, which we're trading at around now, 27,350. This is potential to break down to the downside. We have broken through it. We're now retesting the neckline, which is very, this happens a lot in these types of patterns. The measured move target for this short-term move is 22,600. But you can see on the MACD, we are seeing some slightly more positive momentum over the last week or so. Levels to watch, really, we can drill down maybe to the 4-hour chart to get a little bit more of a intraday perspective. We've posted a higher low at 26,500, so that's one level to watch, but 25.8 is the main support level, which was where we formed a bullish hammer. Above resistance in the form of the Ichimoku cloud, and also this swing high that we saw on Monday, that was 27,666, and above that we've got 28,334, the swing high from last Wednesday, and also this downward trending resistance line at 28,629. They're the levels to watch in Bitcoin. Ethereum bobbing along sideways quite nicely. It's finding a little bit of resistance here. the short similar sort of price action to Bitcoin. We've rallied from around about that really pivotal level that we have 1730, stalled at 1738, posted a bullish hammer and rallied higher, and we have hit resistance at 1846, and the cloud doing a little bit of a job there. But yeah, as you can see, similar sort of price action to Bitcoin from yesterday, a little bit of a rally from that afternoon dip. 1785 is the more closer support, basically, or less important than maybe the 1730-38. Yeah, 1785, that's one to watch on the downside. Break below there and it opens up another attack on that pivotal support. We had the rally in XRP yesterday. That couldn't be sustained past 46.12. Pulled back lower, 43.76 now support, along with this multiple levels around about the 41 cent level, and above. Really, they've got this downward trending resistance line coming in at the 47 cent level. Above that 48.5 should do a job in terms of resistance. That's cryptos covered. Let's go on to commodities. Obviously, we're seeing dollar strength, and this results in gold weakness. Let's take a look at the what we're seeing on the weekly chart. We've seen a couple of weeks ago we posted that lower high 2067. We've seen there was also a shooting star candle that week, so that was a sign that that was a step too far at the moment for the bulls. And after last week's indecision, we've extended lower this week with this dollar strength, really. Support coming in at 1970, that should be quite key. Below that, the major support at the moment for me is 1935. That's the level to watch. Really need to sort of like get back above that 2022 level. And even before that, you've got the 2000, which has proved quite a nice psychological level to trade at. Downward trending resistance also coming in. That comes in today at 2018, so just below that key swing high. And as you can see, if we look at the 4-hour chart, the next real levels to watch are between that 1935, 1945 on the downside. So gold at the moment under pressure and stalling at this like support, was resistance, now support 1970 to 75. So really look to see the action there before making the next move. Take a look at crude oil. Crude oil has improved overnight, and we can see yesterday's price action was pretty decent. Oil inventories yesterday, and we've seen a nice, after this impulsive move lower, we've seen a nice ABC correction higher. Got a bit more potential for the upside. I would say one of the major levels to watch probably around about the 75-70 area. Before that, we got the 73-75, which was where we formed those hanging man candles, 2 of them on consecutive days on the Tuesday and Wednesday, 9th and 10th of May. And yeah, yesterday's high 73.27, so resistance just above there. A bit of a slow start this morning. On the support side of things, let's take a look at support. Actually, 69.43, that's coming in. Brent crude oil, similar sort of price action. The impulsive move lower, ABC correction potential. Really got to hurdle this 77.50 resistance and maybe target that $80 level to see maybe that play out, this ABC correction. Support on the downside, we've got a 73.28, and then between 69.87 and 71.50. That's commodities covered off. Any requests, please throw them at me. We'll take a look at the dollar and euro dollar Mosh in 1 second now. So let's take a look at Forex. Look at the dollar index overall. We can see that the highs we've hit, the highest level since the 27th of March, actually. So a really nice push higher. Although yesterday's candle did tail off towards the end, obviously debt ceiling concerns. But yeah, the push higher is evident here. We've bounced off nicely from this base that we had, the base also in February, if you remember. Got a really nice rally eventually up to the 105.80 level. And we seem to be doing a bit of a similar job here. We've got a double bottom formation that we can clearly see where the neckline is here. There's the neckline. We're extending higher off that. Let's see what we should get for the measured move target would be around about the 104 level, really, for this dollar move at the moment from this double. Could say it's a bit of a treble bottom formation. Nice little neckline there, and extension higher looks set to be around about the 104 level. So obviously this is impacting negatively on euro dollar levels. Let me reset the levels that I drew at the start of the week. As we expected, we found a bit of support at the 10th of April swing low. That was at 108.31. We are trading just below that now. Next big level of support, we go right the way back to May 22. Also did a job on the 3rd of April this year, where we had this sell-off lower and before a reaction higher. So definitely want to watch around about that 107.87 level today. Should find a bit of support there, but this looks quite entrenched in this downward move. Again, you can see the makings of head and shoulders, triple top, double top type formation, and neckline really would be around about here, this 109.10 level. And if we want to extend it lower, we see the measured move for the measured move for that is around about that 107.80 level. So quite a nice, let's draw that again just to make sure. There's the neckline. Sorry, 105.72 level. So that's the double top or triple top neckline that we can sort of like get from this double top formation. Let me reset that. That's completely wrong. I was right the first time. For the double top, yeah, around about. Steve's brain is not engaged this morning. There we go. Yeah, 107.28. So that's what we're, or 107.22.8. That's what we're looking at for the this top information here. Cool, I spent a lot of time messing around there. Cable, similar sort of price action. We've seen a top around about the 126.78 level, and we're seeing prices break down from here. We've got a bit of a support level just coming in at below current levels, 124.35. That's the level to watch. Also, this swing low and retested support level, 123.50 on the downside. On the upside, really need to get back above 125.50 quickly, and obviously that swing high. Let's take a look at some yen pairs. I know these are the sort of like quite interesting markets to trade because the volatility is pretty decent in there. We seem to have got to a level in dollar yen more recently, 137.91. This is the dollar strength that's like swinging us back here, and you can see we can go all the way back, in fact, to December last year for that 138.17. So all levels around here look pretty sort of snug and tight, around about the 138 level, we'll call it. That's really the sort of line in the sand. We're seeing this extension higher, or the higher lows being posted, and also since probably around about the 12th of May, we've seen this extension accelerate quite quickly. But we are heading into resistance. So is this maybe a step too far for the dollar at the moment? Potentially. But the yen seems to be doing a overall seems to be doing a pretty decent job, very strong at the moment. Looking at sterling yen, again we've got this really sort of like decent level 172 area just above, and we're retesting it. We have got the potential for a nice double top formation if this fails, but at the moment you'd have to sort of like sit with this. Really, it's no sign of reversal on the daily candles. Looking like just a nice impulsive move higher, and this has just been a little bit of a sideways distraction. Overall, we can really look at these levels. Take a look at the 4-hour chart. Obviously, we're in a slightly positive trend above the Ichimoku cloud. A failure over the last, say, 12 16 hours, we've sort of like topped out and pulled back lower, but we have found a bit of support at 171.22 and market pushing higher at the moment in sterling yen. Let's take a look at euro yen as well on the shorter term time frame. We've got some nice swing high level back from the 8th of May, which we've retested 149.26. That's where price action has to get ahead for the bulls to continue in this nice impulsive fashion. We have found stalling around this level. We've now got a little bit of support around about the 149 level, and yeah, they're definitely one to watch. Let's take a look at see if we've got any fibs lining up as well from the swing high to the swing low. Fibonacci retracement level up at 149.52 above. So overall, we've seen this little stall. Not sure whether it continue or not. And CAD yen was one that people were asking about earlier in the week. Again, the 4-hour chart just topping out here after the really strong impulsive move higher. Still in an upward trend on the short-term chart. Should find a little bit of support on a retest of that 101.81 level. But could easily retrace a lot more than that and still be reasonably bullish. So yeah, that looks pretty nice. Right, let's take a look at if there's no more requests. I can't see any. Let me just double check, refresh a few of my pages. No, nothing there. Let's take a look at the gun to head trade idea, which a little bit of fun that me and Joe have usually. Joe can't make it this morning, so it'll just be me trying to pick a winner on this gun to head challenge that we have. We both normally pick a trade, have a stop and target. The risk reward ratio needs to be 2 to 1 or better. Sounds easy, a lot harder than it looks. Trades are closed at 9 p.m. unless they hit the stop and target. And we risk 1% of our capital. Since the start of the year, we've had a live account going in, let me just bring that up. Live account going in Oanda. You can see here, we're just below it. We had 2 stop outs yesterday by the looks of things. I know I was stopped. I lost 1874 in the Euro 50. Joe was also stopped out. So we're back below the watermark, the 2000 level. So just under 1% down since the start of the year, which is pretty poor in my eyes, and yeah, not great, but it's not an ideal scenario. We try and show how we can use technical analysis in an instant, really, just without any much planning at all, just see something that we like. Normally what I do is I have my 4 time frames up. I scan through the charts, look for formations, indicators, something from the news that may be of interest and may lead to a decent technical move. Try and find some decent risk reward, really. That's the key to it. And really, if we were to sort of like put this test in front of a lot of people, they'd really struggle. But what we try and do is remain disciplined and have that 1% risk on the account each day, which, yeah, £2,000, you're risking £20. So that's what that's what it equates to. I think most traders nowadays, they risk way too much money, or they have done for decades, risk too much money, and that's why traders with smaller accounts tend to lose money very quickly, because they tend to risk way too much, because they're trying to achieve returns that are probably not people aren't able to return. So that's just a little life lesson in trading. Just scanning through these markets. Euro dollar looks pretty negative, but approaching some support levels. Cable looks negative. Aussie dollar, again negative. Sterling yen looks a bit toppy. Aussie CAD, trying to sort of see something. Gold still extending lower, could run into a little bit of a support level here. That could be a potential one, but I don't want to stand in front of that. We've had the rally in oil. Seems to have topped out. Oh, I haven't done indices. I nearly missed out on indices. Let's just take a quick scan of indices as we're doing this. We've seen a little bit of positivity in FTSE, breaking through the Ichimoku on the hourly chart, trading in the 4-hour chart, and a positive day yesterday. So that looks quite nice. Oh, nice extension higher now in the last hour in the DAX. That looks quite strong. That's posting highs again. If we look at the DAX, that's posting highs we haven't seen, and we're running into that 16,300 level. So that looks really positive in my eyes. Euro 50, maybe that's the one to go with. Seeing an extension higher now, and maybe that will continue. Really sort of like negates my idea from yesterday, but we have broken above them cloud levels, and there is potential as well on the daily chart. We're actually at a really key pivotal level, 43.61. So this looks quite strong on the hourly chart. Nice break higher. I might go with that. I might go positive on EU50. Look really silly if this doesn't work. Something like that, although I will need to have quite a decent stop on it, but maybe I can't afford to have that stop. The reason I'm doing the EU50 instead of the DAX is because you can't really get that size on in the DAX. This break higher, yeah, around about that level, that gives me something around those lines, just around about 2.35. That's what probably the sweet spot for me. Create new order, buy, market, take profit, stop loss. Let's try and get that 1%. What can we get from that? If the stop is at 43.40, 43.35, target is let's do a little bit of playing around with this. Right, that's close, pretty close to where we are, but we need a little bit more on the stop level. There we go. There we go. Stops in. We're risking £17.30. We can't actually risk that exactly 1% just because of the fractions that we have to trade this market in. Let's adjust this. And we're in at 43.61.1. So that's where we are, buying EU50, long of EU50, and looking for a rally to continue into the rest of the day. Really nice break higher we're seeing in the DAX indices, and also seeing that across in the US. If you look at the Dow yesterday, nice bullish engulfing candle, really strong indeed. The Nasdaq extending higher also, and the S&Ps bullish engulfing on that. So overall, looking very strong indeed. And remember, in that DAX, we've got the 16,300 to target, which is the swing highs from November 21 and January last year. So that covers off most of that. Finally, we'll look at the events for the next 24 hours. We've got the Bank of England Treasury Select Committee testimony, US jobless claims, US Philly Fed index, and Australia employment report coming out. That's tomorrow morning, maybe. Is that 2:30 Friday, or maybe it's already out? Events for tomorrow: Fed Chair Powell's speech, and next week we've got global PMI data and Federal Reserve minutes. So lots to think about over the coming days, as well as just for today. So thank you for joining me. Thank you for bearing with me, and we look forward to catching up again tomorrow for the last day of the week. We've made it through another week, very nearly anyway. So thank you indeed, and see you then.